This is your LMAX Exchange technical update for Tuesday, November 8th, 2016. Euro dollar. So the euro looks to be putting in a lower top now after stalling out by a confluence of resistance in the form of the 111 previous support area, the 50-day, 100, and 200-day moving averages. You can see here the market stalled out actually well short of the 200-day moving average and looks to be headed lower. At this point, if we see the market accelerate back below 110, a close below 110 on Tuesday will help open the door for a retest of that recent base that we saw, that multi-month base down at 108.52. Sterling dollar. So cable has broken higher in recent trade, but again, this market remains confined to a very well-defined downtrend, and it's going to take a break back above 128 to really take the immediate pressure off the downside. Until then, there's risk for a lower top and fresh downside extension back towards a retest of those recent 31-year lows in the 120 area. Dollar yen. So dollar yen has been consolidating in recent trade. There are signs of the potential base, but the market would need to establish back above a recent high that we saw around 105.53 to take the pressure off the downside and accelerate gains up towards next key medium-term resistance at 107.50. Inability to establish back above that 105.55 area will keep the pressure on the downside, but we would need to see a break back below 102.55 to accelerate declines. Euro Swiss. So Euro Swiss right now is back at the bottom of a range. The market's been range trading over the past several months, but now it's sort of threatening a break below that range and a potential acceleration down towards a retest of the 2016 low at 106.24. At this point, look for any setbacks though to be supported while the market holds into the 108 area in favor of a potential bounce back towards the range highs all the way up around 110. Aussie dollar. So Aussie looks to be capping out as it usually does above 77. The market has been unable to establish above 77 in recent trade, continuing to stall out. But at the same time, setbacks have been well supported, and it's going to take a break below 74.21 to accelerate declines. Above 77.58 will shift the focus to the top side. Dollar CAD. So dollar CAD has seen a minor setback of recent highs, but overall the market remains highly constructive and continues to look to put in gains up towards next key resistance in the 135 to 140 area. Look for any setbacks here to be very well supported ahead of 130. Kiwi dollar. So Kiwi looks to be putting in some form of a top up here in 2016, looking to round out a top, and a lower top now is favored somewhere around the 74 area or ahead of 74 in favor of the next downside extension back towards recent support in the 70 area. At this point, it would take a break back above the 2016 high at 74.86 to compromise the bearish outlook. SPX 500. So the S&P 500 has now rallied back up significantly in recent trade, but overall the market still continues to show signs of a major top in 2016 at record highs. At this point, look for a lower top now to carve out somewhere in the 2150 area in favor of the next major downside extension towards the June base at 1990. Gold. So gold has seen a little bit of a setback after pushing above 1300, but overall here the market remains constructive, and any setbacks from here should be very well supported ahead of the next major upside extension back towards a retest of the 2016 peak at 1375.